Good turnaround Tuesday, Warriors. Hi, Bran. James, how you doing? Hi, Michael. Glenn. Hi, K-Man. Marcus. Good morning. Ryan. Simon Dyke. I see you too. AJ, Lucas, welcome to F.A.C.E. Kurt, team. Everyone
Good
doing
morning,
okay?
Coach.
Hi, Blake. How are you? I put
It's
some castor
Tuesday,
oil.
turnaround Tuesday. Everything's great.
Yeah, I put some castor oil over my eyelid yesterday. I'm trying everything, bro.
Hey,
Uh,
is that working?
I don't know yet. I'll
Okay.
let you know.
All right.
I, I just had it delivered yesterday. So why don't we start off with the one and only K-Man? Tell us about the
Good,
CPI, buddy.
good morning, good morning, good morning.
Good morning.
Bit of a higher number than expected. Core 2%, core of core 3.5 from 3.7. Numbers are coming down, but it was a little higher than the expectations were. So the yen picked up a little. Was very quiet in Asia, but it seems like people wanting to manage their books a little bit. We're back into dollar yen, back into the lower 150s. Still holding in a bit of a triangle there. Well, it's not
Yeah,
going to change UEDA's point of view, and I base case is still for April, March being a bit too early on the back of those wage negotiations. Even if the market is there's always people like thinking now that March probabilities should go higher, but my base case is still for April. They will be doing it in the new fiscal year, but it keeps Ueda and his friends on track to normalize. That's a fact.
okay. So do you have a line in the sand to where, yesterday you said you're just a bit long US dollar yen, maybe through options where you
No,
would say, I don't want to hold it anymore?
no, I was up for the Bank of Japan. I was up for the CPI, so I legged out of the position and gradually a little bit more early in the morning, and I'm just flat and waiting
Okay.
what's going to happen over the month end really. Um, yeah, it could be that the yen sees a little bit more strength, but then models month end are not really calling for the same thing. So
Yeah.
the yeah, it's
Okay.
possible that we are going for a visit in those mid 149s again before the market has managed its books enough. And but yeah, I mean,
Okay. Yeah. It's
we're still going to have to wait for their decisions, right?
I think your position tells you what you think. I don't know.
Exactly.
So, okay. And it's perfectly fine to say I don't know. In fact,
Yeah.
it's wisdom instead of pretending.
Mm-hmm.
I did notice yesterday when yields bounced, um, the dollar didn't make much hay out of it. And we'll see. Dollar's trading under that 103.80 level, and euro pound still looks pretty good. Still, fighting its way back. The higher low held. It's trying to push into these highs over 85.80. I think is that your number, Ryan? Good morning to you. Over
Morning, Dale.
85.80. Morning,
70.
buddy. 70.
Yeah,
Okay,
70 is my
so
number.
we're a stone's throw away on that.
Yeah.
Okay, and Aussie's trying to recover. It was down about 30 yesterday. I think the dollar's going to come down to. I'd be getting short if it wasn't for the number on Thursday, which I think is the dollar's last chance to put on a rally with a hot number, and probably the yields last chance to shoot up again. So that's the only thing holding me back. But I don't like the action. I don't like being short the dollar when EG is acting good. And MEX can't get going. CAD, I know it had a decent day, but it looks vulnerable to me too. So I think the whole FX board and maybe the whole board is, Thursday's going to be an important inflection day. You agree?
Yep. It's just as important as the last most important inflection day.
Right. Every day. Remember how you would say today is critical.
Yeah.
And then a day or two later, today is critical.
It's more critical.
Yeah. Any vibe on cable or euro, Ryan?
Well, Euro's trying to make a little move up.
Yeah.
All the pictures
109.
look the same. We're getting this bounce that we saw. It's all looking good until you zoom out a bit and you think, well, we've done euro 160 pips in the space of 2.5, 3 weeks. That's not a lot. So compared to the trend that we saw at the beginning of the year, it's a bounce. Is it going to continue? Who knows? But if we get above 85.70, then we should have a little look towards that recent high and towards that 109 area, where I think the world and his mate are waiting to short the hell out of it. So we'll see what happens when we get up there, if we get up there. But it's a snail's pace one this at the moment.
You still long S&Ps?
Yep, still long. Just was just looking at that before I came on the show. I was saying support at 50.80 intraday. That's where the support was. We broke that. Now we're just had a little test up there. We're finding it as resistance. So yeah, we might be potentially on for a test of that 50-40 area. Or if it goes higher, we have to see what 51 does and then that recent high. But bit of sideways now. Need to watch the levels.
Need to watch Microsoft as well. Maybe that right shoulder, it failed from where it had to be a right shoulder. So we'll see. That would be another crack in the Mag 7. The market's going to let people buy Apple again at 180. This was the last rally from 180. Look how the rallies are losing momentum. With the rally we had in the last week or so in S&Ps, I can't say, I can say that Apple's rally was, in one word, pitiful.
Yeah.
So, we'll see.
We're trading back below the 200 DMA. It doesn't matter a whole lot just because we've done it a few different times, but this is really critical because it's a 618 retracement that we just keep sitting on.
Holding. Yeah. And, what makes it even more important is when you go the weekly, the 50-week moving average is holding it. And so that 180 has come into play with different moving averages depending upon time frames. And, under the 50-week, it's going to look really bad. I mean, usually there are a lot of times when a market will break a 50-day or 50-week that ends up going to the 200-day or 200-week. And I mean, the 200 weeks, 48. So that's what I have to say about Apple. What I found was interesting, silver was down 40 cents. I'm not saying that, that was a low yesterday in silver, but I got some action on Friday that I hadn't seen for a while. Here's AG, which, let me show you the daily, which on an earnings day, they opened it lower, reversed, pretty good momentum. And then yesterday silver was down 45 cents and AG didn't give up the ghost on a day like that. So starting to get some better action in this and starting to get some better action in a few others as well. GDX put in a higher low. So, I'm not saying I'm in partially on some miners here, and I don't expect to be smart enough to buy the bottom. But I think that, when you're nibbling here compared to where most people were long and sat because they're bullish gold and miners, we've had 20% declines in ETFs and even more in individual stocks. I mean, here's 30% in Newmont down here. They had earnings and cut their dividend. So on this
one of
last
these days, Dale, one of these days, these miners are going to turn around.
I'm probing, starting to build a position there. So we'll see.
All right, little headline that just came out of the market. Thank you, Big Cuz, for pointing this out. Be prepared for the Red Sea situation to last into the second half of the year. You're seeing futures are coming off a little bit as that headline comes out.
Yeah, we could have some problems with supply chains because of that. So
Oh, you
that's
think?
something.
I mean, you send ships like days around certain and weeks around
Cape
areas.
Horn.
I mean, they're
going around Africa now.
Right. Hey, yeah. I'll take over the charts from here, Dale.
All right, buddy.
But yeah, there's a little bit of I want to say a little bit of heaviness coming in, on that headline. This is a little setup that we were looking at yesterday, and this is the S&P. So let me get rid of these blue lines. So we had this little head and shoulder pattern yesterday setting up. We were talking about in the S&P.
Nice.
It's during the ForexAnalytix shows, but just morning edge and stuff. But we were looking for a little dip below this 50-50 level to be on the long side, because that's all it was going to give us, is just a little intraday thing. The thing is we haven't seen much of a pullback, so it's really more or less setting up a flag pattern. That's why I just kind of redrew things. And I have to say that these pullbacks in the market have just been extremely shallow. And so you have to be respectful of what you're seeing here. We are seeing a little pullback based on that headline that just came out right off of wedge resistance, but it's still extremely bullish. And while we trade above 50-50 in the S&P, it's hard to be bearish, right? So I think you have to just be respectful of what we're seeing here. But that was something that just came out just a moment ago that turned the market just ever so slightly. But remember, every market turn, bigger turn, starts with a small tick lower. So
did you see the crash in NVIDIA yesterday, Blake? It was only up 5.
Oh my God! No,
that's a crash. That's a crash in NVIDIA.
Yeah, I think you're right pointing out some of the bigger stocks out there, the Microsofts, the Apples of the world.
Those are the 2 biggest market caps. 1 and 2.
But you got to keep an eye on them, because once the thrill is gone from NVIDIA, how those respond is going to be really interesting. But let's talk about what we got going on today. So today we've got some durable goods orders coming out. I'm not really sure how much you're going to see a reaction from durable goods. I actually think that the consumer confidence numbers about an hour and a half from now are going to be more of a market mover intraday, and you got Richmond manufacturing index that's also coming in at that point. But the lead in is you have this dollar yen that has to be, it's fairly sensitive to yields, but as Kman and Ryan were talking about, or Kman specifically, we're talking about the national CPI that came out of Japan last night, a little hotter than expected. That put a little bit of a bid in the yen as it is. So it's going to be really interesting to see if the dollar yen has more of a reaction. We're still very bullish at this point, and still looks vulnerable for a move past these highs, especially on some strong data. But if the data is weak, that's where I think it garners a little bit of attention here on the US dollar Japanese yen, because if we drop back below this 149.50 level right here, that's where you might actually see some stops getting triggered. You might have some selling coming in. Ryan, do you have any thoughts on the durable goods orders or the consumer confidence orders that are coming in today?
Yeah, I think that the consumer confidence is going to be the bigger number to watch, particularly after the retail sales numbers that we got. So we need to see if there's a bit of a pickup in the consumer, or if where there's some bigger worries. And obviously the inflation expectations are going to be big for the Fed, to see if they pull back some or they going to reflect the CPI numbers and move up a bit?
Yeah, and that's what I think so too. Because if I mean consumers, and I don't know where Ryan, you always make reference of where you live in particular, but I can just say it about where I live, and I live in a very economic sensitive place. Like, you know, when things are great, people are partying. When things are, you know, tougher for the economy, people, you know, really pull back here in the greater Phoenix area where I live. Consumers have been quite rambunctious where I live, and people are out spending, and restaurants are full. And the reason why, you know, we talk about all this is because if consumer confidence is still, you know, still really strong, it's going to be really tough for the Fed to be cutting rates. It's the higher for longer mantra has to stick around a little bit, and I think that's why those numbers are going to be very important for today. But yeah, it's how things over in your neck of the woods. People are still shopping like crazy, right?
Yeah, it's a little bit mixed, I think. You know, you can get a little bit of you know, New Year, you know, lull, as we say. Everyone, it's a long pay packet, as we call it, from January. You know, between when people get paid before Christmas and then the end of January. But here we are in February. The weather's still crap, so I'm not expecting any great guns here. If we get some sunshine, then maybe sales will pick up a bit.
Yeah. All right. Well, yeah, that's right. You guys need some sun. Kman, what are your thoughts for today as far as data goes? What are you focused on?
Yep, consumer confidence. Because the durable goods, unless they come out really far away from expectations, they haven't moved anything in the past months. So consumer confidence will be it. That is about it. And then we have like a 7-year note auction later on. But as we've seen on the 2s and the 5s, it hasn't done much on the back of it. So I guess for the day, we're trading value date end of month, perhaps a little bit of activity around there. And
yeah, this is, well, in other
today.
words, this is corporate month end day, right?
Well, yeah, but the last 3 or 4 months they have been very absent from the scene. So I'm not gonna bank too much on whatever they may do.
Yeah. You know, the guys are pointing out that the DAX broke out. Yeah, I mean, the DAX has been very, very bullish. We've if you look at the targets for the German DAX, we cover it here on ForexAnalytix. It's just been nonstop bullish, targeting the 161% extension and even higher. If I mean, it's got extensions to go even higher than that, guys. So you know, we're looking to target that 17,740. So wake me up when we get there. We're getting close. So anyway, yeah, we got consumer confidence. Let's talk a little bit about, let's skip this because actually stocks continue to come off a little bit here.
Well, did you see that on our news section there on the Yellen says no risk of recession. And when I read that, I go, uh-oh, sounds like the mortgage crisis is contained. And why is she even talking about it unless she's worried about it? So,
well, you know, Yellen famously said a year ago that she's not going to see a recession in her lifetime.
But she's talking at the G20 in Brazil, and that's part of her opening statement.
I think that since she had dinner with Xi in Beijing and ate those mushrooms, that she's a little off kilter.
No, you guys are now you and Yellen are at the same eye level.
No, she did. She was tripping it during that dinner.
Yellen was tripping balls on mushrooms. Was she? Yeah, she was. All right.
Anyway.
But yeah, anyway, you can read all that here in the Live Squawk feed. But hey, real quick, I want to go back to, you know, let's say we get past today. And remember, we're just kind of grinding higher, guys. I mean, this is like, I have to point out the price action of the market. Pullbacks are very shallow. When they're very shallow like this, it forces anybody who just keeps getting short just to cover. I mean, you know, yes, we got maybe a headline here and there might drive a little bit of selling, but you know, when traders come back, soon as the stock market opens, they scoop things back up, and we carry on. But tonight, we have a couple of things happening in Asia that I think are a big deal. We have Australian CPI, and we have New Zealand, the RBNZ rate decision. So one of the big currencies I feel is going to be really in the crosshairs is going to be the Aussie Kiwi. I actually was short up here around 106.60, 106.50 last week, covered it, or 2 weeks ago, covered it last week on the way back down. We're hovering around a lot of key support. But here's the thing. I think the RBNZ tonight is going to be more, I don't think they're going to be as hawkish as everybody believes. Everybody thinks that the RBNZ is going to, they're still pricing in rate hikes this year. And I just don't know if they're going to be as hawkish. So I think the risk is that they aren't. Then you have Australian CPI, which, I don't really have much of an opinion there, other than, we've seen a lot of disinflationary data globally, aside from the US. So I don't see why, Australia is going to be much different. So, to have even though the market's expecting a little bit of a tick up in CPI, I don't know if we're going to really get that on the core level. So anyway, I think the Aussie Kiwi is going to be the one in focus, but we could have, weak data and then also an RBNZ that's relatively neutral instead of so hawkish. And then, the Aussie Kiwi maybe doesn't go anywhere. But you look at the Aussie and the Kiwi dollar. The one thing I do have to point out about these two currencies in particular is they haven't gone up the Kiwi, you could argue, has gone up a little bit better than the Aussie, but these currencies haven't responded a lot to risk on. And I've told the ForexAnalytix community quite a bit over the course of the last couple of weeks. As soon as I see the whites in the stock market's eyes, and I think it's time to really be short equities, if I see that, the first place I'm going to go is I'm going to start shorting Aussie and then Kiwi dollars, pretty aggressively. So that's kind of how I feel about these two particular currencies. Ryan, what are your thoughts about the Australian CPI and the RBNZ later on this evening? Anything, well, which will be tomorrow morning in Asia. Any thoughts about those?
Well, yeah, the Aussie CPI, obviously, if it comes in hot, then the market's going to get all hawky about it, because they haven't. Their stance is at the last few meetings, cuts on the table, holds on the table. It's not, sorry, hikes on the table, holds on the table, not holds and cuts. So they're still keeping that hawkish door open. So, if it comes in much above expectations, or expect it to rise to 3.6%, then yeah, the market's going to get hawkish a bit. And that will probably lead into the Kiwi as well. I'm in a similar boat. I think I'm going to leave a couple of orders in Aussie Kiwi down near that 105, 104.70 area. If they do hike, I can't see them getting on an actual new hike cycle. So I'm going to be maybe looking to fade that move there. And yeah, that was actually my play of the day yesterday or today on the trade-off for Aussie Kiwi over the RBNZ.
Well, hey, if you guys don't listen to the trade-off in the UK trade-off, make sure you listen to Ryan and Michael Brown's show. So what you would be doing is you'd be buying down here around 105.
Yeah, 105, 104.70. Quite a wide stop, I'll give it, because it can be quite volatile, the Kiwi. So I'll keep the trade size low and the stop fairly wide.
You said something kind of important, and I in my opinion, and I think that I want to make sure that everybody else heard what I heard. They're not going to start a new hike cycle. So in other words, if they do raise rates, which I think what there's about a 25% chance they do, maybe 20. If they raised rates, it would be a one and done. So any spike down that you saw in the Aussie Kiwi like that should be probably reversed. I mean, yes, there's going to be a move in the Kiwi just from a repricing standpoint, but overall, it would be one and done. Am I correct in reading you there?
Yeah, I think so. I think it's just giving it an extra sort of nudge because they'll be worried about how high rates are anyway. which they're already worried about that effect on the wider economy. So, yeah, if they have to combat sticky inflation, then they just want to give it another little poke with a stick rather than getting the mallet out.
Awesome. Okay, I hear exactly what you're saying, and I hope everybody picked up on that as well. Kman, what are your thoughts about this evening or tomorrow morning in Asia?
Yeah, the Australia is only like a partial CPI. It's the weighted mean, but it could be a bit of a mover there. The Kiwi market is long going into the RBNZ. So the surprise or risk trade is probably that they do nothing and or is not as hawkish as the market may want to hear. So initial reaction, if that were to be the case, is probably the Kiwi a fair bit lower, because not only is the market long, but we also cannot forget that the Kiwi market is not very deep. It's by far not as deep as Euro, cable, or even not the Aussie. So
deep meaning liquid.
Liquid,
yeah, just so everybody at home.
So for equal amounts, it takes a lot more pips to execute. So and then there's the second thing. If they stay put, I think there may be an initial reaction a bit lower, but then or speaks an hour later. If he's very hawkish, we might go the other way. So the other thing that I would caution for is that we could be in for a night of saloon doors as well in the Kiwi. So be careful. And he's going to talk a lot over the next 24, 48 hours. If they hiking turn, and as a couple of banks are expecting, then probably the longs will get more food on their bone, and probably will keep the Kiwi bid versus quite a few currencies. That's how I see it.
All right. Well, you know, I myself am playing a little bit of Kiwi because on the trade-off show, Ryan, you'd probably remember this because you may have seen it, but our trade-off show last week, I was buying the pound Kiwi as my play of the day, buying it down here at the 618. And I'm looking to play it on a breakout of this channel. I'm looking to add. So if they come in a little bit dovish, might get an actual ad where I can pick up even more, you know, looking for an extension higher. So it's going to be, I think it's going to be a player tonight for those of us that are playing currencies. I think there's a lot going on in the next 12 hours. So 12 to 15 hours. So make sure that you've got your head on a swivel, if you will. We got a couple of minutes before our data comes out, so I'm going to get us set up. So the way we do that is I'll go over to ForexAnalytix. I'm going to pull up the data flash here, and you can see it right here. This will just kind of show you the economic data as it's coming out, the durable goods. I'm going to put that over to the side for a second, and I'm going to pull up 3 charts.
Hey, man, how deep is your love, BGs? Deeper than the Kiwi?
Deeper than the valley.
I thought so.
All right. Dale and his dad jokes. I tell you, they don't get much better than that.
Well, you know,
now
they're grandpa jokes now.
Dale has a lot of love to give, so he's spreading it around.
Yeah.
Actually, you know what I'm going to do is I'm going to put the dollar yen to the left. I have the S&P right here in the middle. We have 10-year yields over here to the right. Pull up data flash over here. We have about 40 seconds till the data comes out. Dale, any thoughts going into today?
You know, I'm reserving a lot of my judgments for Thursday.
All right, PCE data it is. He's going to be waiting for the PCE data. Here we go. All right.
I'm gonna be humming that song for the rest of the afternoon, Dale. Thanks a lot, mate.
Sorry, buddy. I know.
Hey, you know, you're lucky I don't throw the Smurf song out there and stick that in your head all day long.
I'll chomp that with a Badger song.
All right. Heads up. Here we come. You can see the forecast.
Soggy. Much worse than expected.
Wow, look at that.
Wow.
Yeah. Yeah, and the dollar yen is ticking lower, and yields come off a little bit, but now we're looking at a little bit more reaction here. Not a huge reaction in currencies right now. I think as we said, oh, dollar yen's starting to come off.
Yeah.
Remember, the yen was strong coming into this data because of the inflation data last night out of Japan. So this, like I said, this wouldn't be so surprising. I think the consumer confidence data is going to be more important. Like, you know, Ryan agrees, and what I was saying a little bit earlier. I think that's the data to be watching today. Plus, we have a Richmond manufacturing index. Now, remember, the regional manufacturing indexes have been showing a lot of, over the last 2 months, a lot of weakness. We're supposed to get a little bit of a bounce back, but you know, we're supposed to. Doesn't mean we will. And that's the underlying weakness that we're seeing in the US economy is some of these regional manufacturing indexes. So don't forget that we do have Richmond manufacturing coming in at the same time as consumer confidence. Anyway, I want to say thank you all for being here today. I'm going to point out a couple of things. If you guys haven't been to tradersummit.net, a lot of good conversations happening here. I've been, you can see there's Kman. Kman, we got your big mug right there, along with everybody else's big mug too. But there's Kman right there. So great interview that I had last week about Swiss and yen with Kman. A lot of good interviews. These two are from overnight. We have Michael Brown and Richard Matthews, and then Shy Girl yesterday as well. You're going to see a lot more interviews and a lot more analysis on tradersummit.net. So make sure you check that out. And also, if you want to be involved in our community, ForexAnalytix community, it's only $1 for 10 days to jump in the chat room and be with us all day long and be able to, you know, talk markets, talk about what's happening, being able to chat with all of us, talking about when Banxico's quarterly inflation report comes out tomorrow, which we were trying to figure that out this morning. Lots of great conversations and setups here inside of the community. So if you're out there just kind of fumbling around on your own, why not be in a community with the rest of us? Like I said, $1 for 10 days just to try out ForexAnalytix. So we'll see you there. All right, Dale, I'm going to pass you over the baton and have a great interview. I know you got Ben Maldonado here.
Yeah.
Ben, how are you? Is he here?
Yeah. I have to unmute him.
I'm here.
Oh,
there.
How you doing, Blake? Good to hear
Ben
from you.
Maldonado. He's going to give us a great view of longer term cycles in the market. So you guys should all stick around for Dale and Ben's conversation. So Dale, thank you so much. Have a great interview. Ben, very nice to hear your voice.
With Ben, it always is.
Yeah,
always.
I got the magic mushrooms from Yellen.
She did eat some, Ben.
I know you and I talked about that a couple of
weren't you who
ago.
sent me that article?
Yeah, I sent it to
God,
you.
Yeah. And you know, she liked it.
She did.
She started making all kinds of deals with Xi after that.
Crazy
I think she made a deal with Xi when he came to San Francisco to make sure the dollar didn't go higher anymore because they're getting tired of spending money on intervention. Anyway, let's go, bro. I'm looking forward to seeing the future with you.
Yeah, so we're doing something a little bit different. Usually we focus on the huge cycles, because I wanted to make sure everyone understood bigger picture what's going on. Today we're gonna narrow it down to like the next 16, 18 months, 2024 and 2025. So we're gonna really zero in and focus on, what we can
you,
expect.
that's a microscope to you.
It is.
To most people, it's it's a telescope. But,
yeah, I mean, the interesting thing, Dale, is we're like on the doorstep now, ready to cross the threshold of this whole big mess that's coming and all these changes. What we're going to talk about today is what to expect for this year into next year, 2025. There's going to be major changes occurring all over the globe, not just in the US, and not just in the West. It's just a period of massive changes in both markets and governments and societies. 2024 is also going to be the year of karma, where what you reap, you're going to sow. If you've been a bad person, it's gonna come back on you. And the things that that sort of bad actors and leaders have done are going to boomerang back on them. Same with the markets. It's going to be time to pay the piper. The other thing, everybody's since since we topped in 2021, 2022, and then had that mini bear market come through. Everyone was saying, "Oh, the panic's coming, the panic's coming, the panic's coming." Well, it wasn't. We never really saw a panic in the markets, but the panic windows are opening, and we're going to identify and give people an idea of when we think that's going to be in terms of when those windows are open. And then lastly, we'll talk about markets that can benefit from this period and potentially, do well in this cycle.
Still bullish the dollar?
Yeah. Yep.
Okay.
Yeah, we'll talk about that.
Okay.
The key thing to understand, and I think I don't say this lightly because it's really important. Things are not going to be the same. We're not going back. We're not going to have, whomever you support politically or whatever leaders or whatever you think in terms of it's going to go back to the way it was. It's not. Things are going to be very, very different in the world and in this country. The things that I think we're going to see that I want to focus in on. We talked about through the epic cycle how these institutions were being weakened and people were losing confidence and faith in them. Over the next 18 months or so, we're going to start seeing visible breakdowns. We're going to start seeing these institutions actually fail. And I'll go through some examples that I think we're already starting to see. For society, I think the civil unrest we saw in 2020 is going to be back on steroids and make that look like it was, a Thanksgiving Day parade. It's going to be really bad because people are getting to the point where they're fed up and they really want to see a new direction and change, and they're not getting it, and they're just
Angry.
sort of angry and at the end of their rope. So I think civil unrest is going to be a strong thing. An interesting thing, an unprecedented number of national elections around the world are taking place in 2024. 64 different countries plus the EU are all voting. And we'll talk a little bit about that. In risk markets, I think we're going to go from this cyclical bull, back to the secular bear. Commodity markets, I think, are going to do the opposite. Since the peak after Russia's invasion, I think we're going to start to see those shift from, the bearish cycle to the more secular bull there.
Grains have been obliterated.
I know, and I'll show you one chart in the grains that it's a nasty correction, but we're just pulling back to longer term support in some of these markets. You were talking about nat gas the other day. I'm going to show that too. Real estate, the sort of throw this into the cocktail. We're about to start the downturn in the real estate cycle, and that's a long cycle, like 18 to 20 years. And so that the current up cycle is going to expire in early 2025, and we're going to go into this 3 to 4 year period of a pretty big correction in real estate. So we got all those sort of things that are coming at us. Civil unrest, it's not just a US thing. People need to understand this is there's a website that shows you all of and you can filter it for different things, shows you all the different sort of protests that are going on all over the world. And
Brazil had a big one the other day. They had hundreds of thousands in the street.
Argentina's having it, Germany, the Netherlands, all different countries in Europe where these farmers are just fed up. France, the protests are huge, and it's going to intensify and get worse. And these people are demanding change. I'm not saying it's going to be, the French Revolution where you're going to see that kind of violence, but people want change, and they're not just gonna deal with words and promises anymore. They want change, and we're gonna see it dramatically.
Is the U.S. going to be able to pull off an election?
That's a great question, and I think that's one of the places where the panic could develop, and we'll talk about that in a second.
Okay.
For national elections, all these highlighted, the ones that are colored in, all these different countries have elections that are going to be national elections, where
Yeah.
the whole country is voting. And I saw the figure. It said more than 40% of the world's population is eligible to vote in 2024 in national elections. So there's the potential for massive changes. I mean, if what the result in Argentina is any indication, I mean, you cannot get much more polar opposite than what they went. They went from
Right.
socialist slash communists, which have been in charge there for decades, to a libertarian.
You really include Russia as an election?
I mean, it's officially an election, but
Right.
is it a real election? I mean, anymore, Dale, can we say that about our country? I mean, it's really getting bad everywhere,
Yeah.
you know?
Well,
And that's
it's still freer here than there.
absolutely no question
All right.
about that.
All right.
Um, some of the institutions that I think we can say are, falling down and beginning to show serious cracks, the press. I mean, the press is the people's confidence in the mainstream media and the press is at an all-time low. I think it's down to like 32%. Uh, does anybody believe anything that's put out by a national news organization anymore? I mean, that has failed, and it's
What
being
do you
replaced.
what do you believe?
That's a good
What you
question, and
see online?
it's more of like you have to find trusted sources, right?
Well,
Through
how do you
this
do that?
it's through this, the connections we make, in our circles, online with people that we learn to trust. That's where people are getting their news now. Now, a lot of times it could be not correct and inaccurate, but that's the way things are going. I mean, here's another thing: public safety. Do people feel safe in San Francisco, Chicago, Baltimore, Philadelphia, LA? I mean, that's completely failed, and there's no losing faith anymore. It's a fact now. You go to certain parts of those major American cities, and you're taking your life in your own hands. And that's just here. The justice system, again, irrespective of politics, do you think that people have confidence in the courts and the justice system right now here? And these are just examples, of this country. It's also present all over the globe. So the transition this year is from losing faith to actually seeing the visible failure and deterioration of these institutions.
Well, aren't we seeing that with the Congress, House of Representatives?
Absolutely. How about the
It's
border?
broken.
How about the border? I mean,
Broken.
there's nobody that can say, "Oh, that's functioning properly. That's working."
Yeah, true.
It's gone. It's gone. So the title of this slide, I think, is really important to understand because 2024 is going to be all about karma. It's things that we did previously will come back to us, the good and the bad. And how this relates to the markets is I believe that the exuberance and the craziness and the speculation and everything that came along with these zero interest rates, this year the bill gets presented and the tab needs to be paid. And how that's going to play out, I don't know exactly. I don't know what the catalyst is going to be, but I know that the windows for this sort of mass realization are beginning to open. And one of the things I think that people don't realize is you just can't keep running the markets this hot forever and not have to ever pay the piper. Let's go to the next slide because this is one that I think um, you know, I'm not a huge Buffett fan. I think he's an incredible investor. He also, is an insider who gets a lot of deals that you or I could never get. But he has very good fundamental reasons for making the investments he makes. And one of the things is his market cap to GDP ratio. And if you look in 2009, we got down to like around 50, 60%. We're now nearing 200%. So is that one of these things where there's karma involved and the piper needs to be paid? Where we need to see a correction. If we get down to just parity, you're talking about 2,500, where market cap to GDP would be at 100%, be 2,500 in the S&P. So it's something to watch. I don't use this as a gauge of where the market could go to. It's just something to consider when you're looking at paying for the excesses and the party's over. It's time to clean up. This may be what's coming. Panic cycle. I've studied a lot of the market history, in looking at how the cycles are intertwined with the past, because I think in looking at the past, it gives you an idea. It doesn't give you a roadmap, with exact turns, pinpoint turns, but it does give you an idea of what you can expect and what's possible. The current cycles that we're in are connected to panics from 1857 and 1932. Interestingly enough, the panic of 1857 was caused by a banking crisis. A bank in New York failed, and then they started calling in, loans and assets, and it just sort of tumbled from there. The interesting thing about this one is that the telegraph made it the first crisis that spread rapidly. So there wasn't that informational advantage like the Rothschilds had in the Napoleonic Wars and those sort of things, where they got the news first and then acted. The news spread quickly, and the connection to today, I think, is with technology, how everything is instantaneous, right? News is instantaneous, information is instantaneous. So there's that connection with there. The 1932 one is interesting to me, Dale, because I know you're a big ag guy. That's when we had the Dust Bowl and the extreme drought, and the supply of crops and agriculture was really, really low. Are we heading for something else like that? I have no idea. Is it possible? Is the table kind of set for it? Yes. Panics are set off by catalysts, right? And the catalyst is something that changes perception suddenly. For whatever reason, the selling starts and then everybody wants to sell. And so what are the potential catalysts we're looking at that could trigger these panic cycles? I think war's on the table. We've talked about that the last few interviews, that war was a distinct possibility, that the background was there, the spread of war is going to happen, and we got the additional war in the Middle East. I think, unfortunately, that signature is going to be with us for a while, so we have to. War is definitely on the table. One of my theses is to look and see where the most borrowing has taken place, sort of the expansion of credit, because that's a decent chance for that to be the trigger. In the Great Recession, it was real estate, like strippers were owning 4 condos and renting them out, and credit was easy, and everybody was buying it. And then we had the great financial crisis. The most debt that's been put on in this cycle has been sovereigns. So is it going to be a sovereign debt issue? Possibly. Terrorism. We've kind of all been lulled to sleep to thinking, Osama bin Laden's dead. We don't have to worry about terrorism. That may rear its ugly head. And then the one you brought up earlier, the election results. And I'm going to ask you a question, Dale. No matter what the election results are, whomever the candidates are, I don't think it matters, Republican versus Democrat. Is the other side going to accept the result?
No, it'll probably go to the House of Representatives to be settled.
And
maybe
let's say it
Supreme.
gets settled in the House of Representatives. Is the other side then going to accept the result?
Look, people didn't accept the result from the last one.
Nope, they didn't.
So
And
why should it be any different now?
I think it's worse, right? The
Yeah.
sentiment's worse now. And
Yeah.
it's interesting. I went back to 2000 when, the Bush versus Gore issue, where
Yeah.
every single election, not counting the incumbent, every single election, people didn't accept it in some way. So the first one was Bush Gore, right? And
Right.
then Bush, of course, was the incumbent, so he won the next election, so we don't count that one. After that, Obama, right? And there's people who don't accept him because they said he wasn't born in this country. His birth certificate was a fake and all that other garbage, right?
Yeah. Who was that person?
That was Obama, right? They
No,
wouldn't accept it.
who? But who promoted that?
I don't know who was the big promoter of that. Was it
You do
Trump?
too. Yeah.
Was it Trump? Yeah.
Yeah.
Okay. So,
Yeah.
but again, there was this questioning the election and the validity of the election. Then, of course, you had Trump, where they didn't accept the Democrats didn't accept him. Then you had Biden, where the MAGA people didn't accept that, and it's getting more intense and worse with every single election. So this one is set up to where that could definitely be the trigger for the panic in the period after that.
A constitutional crisis.
I think it's definitely on the menu. It's definitely on the menu and has way higher odds than you'd think normally it would have, right? And that's all we're looking at. We're looking at what are the odds of something, right? Is it above average, below average? And then we could say, okay, if it's above average, what's the expected value from that if we put this position on? And that's kind of how you can, judge whether something makes sense to try or not. Here's a couple dates to watch that I think are really important. Early May 9th to be exact. That's a good time frame to look for a high for this melt up rally. I think we are going to go higher. And I think that period and that time frame is a good date to anchor down and watch for a possible high in risk then.
Why?
And then why?
Why geometric squares or what?
It's partly geometric squares, it's partly the cycle, and it's the panic window opens in that time frame. And so if the window is opening, it's probably a good chance we're making a high as the window opens.
Okay.
June 9th of the following year in 2025, that's where we could see a panic low. So a year of selling, right? Because remember, we're going to get a high, we're going to get a pullback, and then we're going to get a lower high, and then we're going to start really selling. And that's kind of the pattern that you see at these tops. And so it maps out to where we can get this low in this June, July of 2025 timeframe. And obviously we can dial that in, and I will dial that in as we move closer to these things. But I think those are decent dates for people to put on their calendars and to watch.
Any idea as far as highs in the S&P? I mean, I know I could come up with, if you just take the whole range from 4,800 to the correction low, and we hold 4,800, that measures 61. I know guys that are talking 7,000 S&Ps.
Which I think would be incredible. I don't have anything that high. I'm more in the mid fives.
Okay.
But it as you know, because you've seen it, when the train gets rolling, man, it goes higher than you think possible. So it's
Well, we're only 2.5 months away from your
yeah,
window.
yeah,
Yeah.
I
Okay.
agree. So what are the opportunities and what am I looking at? I'm looking to play risk both ways, being very tactical. We're playing the moves up as they set up, and Blake was talking about the S&P. If you look at it technically, it's still bullish. There's nothing bearish about it yet. So, and a lot of people I think have been getting run over by trying to step in front of this train. But you got to play it both ways. There'll be a time, hopefully, once the high comes in, everything the setup is there, and then you get short, and then you enjoy the ride. And in the meanwhile, you play to the long side while it sets up and the risk rewards there. There are epic cycle plays that we've talked about the last few times that have started perking up, and I want to go over those. I really think the transition from bear to bull in commodities is going to take place starting this year. So I want to look at energy, some ags, and some softs. I think you buy the US dollar, and I know everybody likes to say, oh, it's, it's going to lose its reserve currency status. It's going to, they're printing money like crazy, the budget deficit, this and that. It is the tallest midget in fiat land. There's no debating that. So if we have problems, if we have panic, if we have issues, money's going to flow into the dollar. And I still think you can sell bonds. I do not see rates going dramatically lower. I thought the people calling for cuts in March was crazy. I honestly believe the next move from the Fed may be to raise rates, not cut them. But we'll see. We'll see how it plays out, especially on the inflation front. All right, let's look at some charts. So here's the ES in calendar days with a potential kind of path that I could see. We have a little correction here, maybe down to the second, third week of March, and it could be sideways. It doesn't even have to be deep, and then we take off into the potential terminal phase into early May, and then we start the stair stepping down into the potential panic in 2025. Or again, around the election, December, January, end of December this year, early January next year, if there is, as you said, a constitutional crisis. So that's kind of the path I see on risk. NQs look something similar. Maybe a little pullback, could be sideways, go make a higher high, and then we start, going over the top of the roller coaster and start the down move. Some of the epic cycle plays I think that we've talked about in the past that are really winding up are gold. I know you're looking for a potential clean out move, and I think that would be perfect, right? If we come down, sweep the stops under 2000 and then go. But
we did that.
Yeah,
we
look
did
at
that
this.
already.
We did do that once, but it could happen again. Look at this, Dale. You see the triangle here that's formed?
Yeah.
Look where it is. It's sitting on top of all these highs.
It's a cup and handle, isn't it?
Yeah, it looks like a cup and handle. And it's just so anybody that says, oh, gold's terrible, Bitcoin is the king, gold's, for old people and all this. This is not a bearish technical formation at all. All it's doing is building up energy for a big break. And right now, because of where this triangle is forming on top of the highs from 2020, 2022, 2023, that's bullish. So we'll see.
Okay, the bearish argument is we spiked above it, false breakout, and we're underneath it now.
That's right. That is the bearish argument. I just say go look at a weekly, go look at a monthly, and look left.
Okay.
Let's look at the next one. You were talking about this today. Silver's a little less bullish because it's not sitting on top of these highs. But look at after we got this spike low in July of last year. It's grinding its way up, triangulating just like gold. If you look farther left, we're on top of all this, right? All this here. So these things, and remember, they fit well with this whole things are resetting, things are going to be changing. The financial and global trade and monetary system is not going to be the same. Gold and silver forever, right? And here's the new money.
If the monetary system is not going to be the same, how can you be bullish a dollar?
Well, it's not bullish for 30 years. It's bullish for the next couple years.
Okay.
In the transition, essentially.
You're like in the milkshake camp.
Similar
you could
thing.
120, 140.
Yeah. Yep.
Okay.
as they reset the whole system, right?
Okay.
You're not going to be holding like South African Rand if that's happening, right?
No, you
Most
don't even
likely.
want to hold that now.
You don't want to hold that now. Here's one that we've talked about for the last 2 or 3 shows. I mean, the epic cycle play is coming through big time here. And it just, again, I'm not a huge crypto guy. I've owned Bitcoin. I've had some other cryptos when things were going crazy and I was trading them. But you have to, you can't argue with the chart and you can't argue with what it represents, which is an alternative to the current system. It kind of fits with the cycle. So Bitcoin's been a good performer.
Yeah.
Crude. Here's a Forex stop hunter special, right? What if we just keep winding up in this triangle, swing down to take out all the stops, and then we take off? I like crude higher. I think the supply demand, you talked about, problems in the Middle East with the Houthis and the Red Sea, all that points to issues and disruptions and higher prices in crude. And this again is one of those commodities that here's the Russian invasion. It's just kind of been drifting down in like a bear market. But look where we're pausing on top of all this. It's bullish. Here's one that the old Widowmaker, and the reason I put this one out, it's not don't go out and buy it today, but understand where you are compared to other points in history where it's been considered a value and a bargain. 2020 lows, 2015-16 lows, 98-99 lows, 95-94 lows. When the setup's there, this is one to get in.
Okay.
I mean, you're in a value range,
Cheap.
right?
Yeah.
It's value. Here's wheat. This one
Wheat has the most constructive chart of all the grains.
Absolutely. Unlike corn and soybeans, which, continuing to make lows, this thing's been making a higher low since the low that made in last year. It's made a higher low so far. And again, I encourage you to look at the bigger picture and see, look left and see, where is this support coming in? And we're sitting, in this case, we're sitting on top of the highs here, 2017, 2018, 2019, 2020, right? We're right in that range, testing those. So wheat looks good. I do think corn and soybeans at some point when we get the setups, they're also going to be good candidates. It's the old, you try to buy what's out of favor once you get the signal that it's going to start moving. And I think that's the case with most of the commodities. Here's one that broke out. We talked about it a couple times on the show last few times. We actually got the breakout. Right here was we were in this sort of wedge for a long time, like 18, 20 months.
Yeah.
We broke out and it's moving up nicely. And you can see what happens when it breaks out. Like here was a triangle that it broke out of. Look at the moves you get. Pretty nice move. So cotton is one that is moving now and looks very bullish. It's a good buy on any pullbacks to support.
Will everyone in America go back to polyester leisure suits?
Maybe that would connect us with the 70s.
You had
right?
I saw that picture of you at the disco.
I had a tangerine one. How about that?
Good one, Ben.
8th grade graduation. I wore my tangerine leisure suit.
Wow. Surprised they let you go to high school. Anyway, go. All right. Coffee. Yeah. You're probably going to say cocoa.
Cocoa went crazy already. Yeah, we were on that. Unfortunately, I got out too early, like is always the case, because who knew that was going to be the monster it was? But yeah, we caught the break. Yeah, we caught the break. So here again, you got a triangle forming, right, on a monthly basis. But look where the lows are, Dale.
Yeah, classic.
Along historic support, right?
Yeah.
So coffee looks set to break out. There's the Dixie. Now, again, look at the Dixie, right? Everyone's talking about, oh, the dollar's done. BRICS is going to have an alternate system. The U.S. fucked up. They did this. They did that. They weaponized the dollar. Well, look where this triangle's sitting. On the previous highs, on top of all these highs.
Yeah. What if we took them out? Would you change is that your bull bear line? What
Yeah, I
is
mean,
it,
listen,
like
if we get
par?
yeah,
Is that par?
if we got stuck, yeah, right around par. If we got stuck below 100, below par, right? If we
Yeah.
came down, tried to go back up and failed there, absolutely I would switch sides.
Okay.
But sitting here, the odds
Yeah, you
favor
could give
the
it the
breakouts.
benefit of the doubt.
Yeah,
Yeah.
the odds are that the breakout's going to go higher. So we play it.
Okay.
And then lastly, bonds. When we last saw bonds 3 months ago, we had this little bar formed, and I said we're going to probably rally up to here and then turn. There's your rally, fail, right? Failing at resistance.
Yeah.
In this area, boom. I think rates are going higher. And like I
Could
said,
we get up to if this pullback doesn't make a new low and we have another run, where's that trend line break coming in?
It's like around
110.
125, 126.
Okay.
That's the area we got to get above. If we get above that, then I got to change my tune. Rates are going lower.
Okay. All right.
But that's, that right now odds favor they're heading the other direction. And that's it for the charts. This little thing, we do the weekly videos. If you want to listen to what we have to say, come check it out. And if you want to follow me on Twitter, just go there.
Thank
So
you, Ben.
it's not the end of the world, Dale. It's just the end of the world as we know it. And there's going to be big changes. And I think having people understand, what those changes means, then we can get positioned in a way that we're not only not going to get hurt, but maybe benefit from the changes. And that's what we're trying to do.
Yeah, it sounds like making money isn't going to be the most important part of what we're going to go through.
Yeah, and I think that's right. It's getting through this period of change and being able to come out on the other side in one piece. And I think we can. I think it's not, like I said, it's not the end of the world. As one guy told me one time, an old guy, when I first started in the business, he said, "Don't bet on the end of the world. It only happens once."
Okay.
So don't
The
bet on the end
times
of the
they
world.
are changing with Ben Maldonado. Follow Ben, watch his videos. Ben has a unique perspective and has, since I've been talking to him, which has been many years now, Ben, and I want to thank you for your contributions to our community and how you've kept people, you've given them a real nice macro view for them to, plan their lives around. So appreciate you.
My pleasure, Dale. I'm always happy to talk to you and to share with your community, because it's the work that you guys do, and Blake and the team. It's fantastic, the information you provide to people.
All right, Ben. Well, I'm rooting for you. Give me when the bell rings on a few things, give me
give you a heads up.
Give me a shout, and I hope that this karmic year that you reap your rewards and avoid the whirlwinds.
Agreed. That's the goal.
Okay, buddy. Ben Maldonado, everybody.
Take care, Dale.
Get to know him. And thank you, everyone. Remember, don't just count your cycles, count your blessings. Blessings are something you can always find something to be grateful for, even in a crisis. And it's hard to be depressed and grateful simultaneously. I know, because I've tried it my whole life, and it doesn't work. So choose gratefulness, and thank you, everyone. Hope we gave you seeds for you to think about going forward. All right, Ben, keep in touch, my trading warrior brother.
All right, take care, Dale.
All right, so you could join the team, everyone, in about 6 minutes on the Morning Edge. And we'll see everyone tomorrow. Good hunting. Adios. You could catch me on Real Vision today at 4 p.m. Be on the daily briefing. Adios.